This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
So what has worked so far in October has been, of course, a return to volatility, right? We're seeing that volatility, but it seems like the market is actually rewarding you for carrying some of that volatility, which is you could actually get paid for taking on some risk there. And of course, for the longest time, what we had seen is really the low vol. So you were not getting really paid as an investor to take on a lot of volatility. So low vol was the thing.
Mm-hmm.
And the other themes that are coming up is size. We are seeing a huge resurgence of small caps. So right now, small cap are showing a sign of life.
Not surprising, right?
Not surprising.
But 2 months ago, I predicted this on stockcharts.com because it was the technicals were showing that, and now it's coming to fruition, and the valuations are there relative anyway on a relative basis. So
Exactly.
so that's not surprising, and the mid, going down the mid and small cap makes a lot of sense right now. I totally agree.
So we're seeing that coming strong in October. That's been negative. I mean, year to date, was one of the worst so far. So this is really a kind of an emerging theme. Same thing with valuation. Tom, we talked about value. However you define it right now, we're seeing also that resurgence. People looking at maybe what looks cheap, what is the good value in this market. And at the bottom, I guess not surprisingly, when you see those themes emerging, you see like your price momentum, which had been driving the market for a decade, are now at the bottom of what's working in the market. So there is a bit of a shift. Of course, we don't want to read too much in the tea leaf. You talked about it. So I think we hope that those have some legs. We can maybe develop those themes in the portfolio. But right now, those are interesting market actions. So we're seeing a bit of a different focus.
What comes through my mind is that when we look at it from just a pure numerical standpoint, and we see volatility, for example, being rewarded, and then small cap being rewarded, and then every day I'm looking at the bottom up numbers. I can see what's happening bottom up, and it's like I see how that translates into the higher numbers.
Mm-hmm.
And I think that, like, for example, in volatility, the solar is in the cloud. Those are higher volatility names. Their average daily volatilities are 4 to 5, 6% per day, whereas the S&P is something like 2. So it's that would bring those numbers up, and so it's very interesting to see, kind of looking at it from a business perspective. When I'm kind of wondering your thoughts, whereas tactically, I'm looking at like our holdings, our firm holdings right now, and we have, like, just on October 22nd, which is tomorrow, we have 1, 2, 3, 4, 5, 6 companies of our companies that are reporting, and then the next day we have only one, but then 26. But next week there's tons, as you mentioned. So I'm wondering from a tactical perspective what this means. And I was kind of going through some kind of game theory thinking yesterday, actually, or really early in the morning, and it seems to me like there is there's probably going to be some kind of sharp declines that you could take advantage of. But it also seems to me like no matter who gets into office, we're probably going to have more stimulus. Plus, and I know this is controversial, plus I think the probabilities are higher that we're actually going to start opening up in the first quarter of next year. So if you add up more opening up, plus the fact that we have the earnings are going to be kind of behind us, right?
Mm-hmm.
Plus more stimulus on top of that, I think it's possible that the first quarter can be a lot better than people think. So either the market, if you just work with me on those assumptions for a second, and we can talk about each one of those if you want to. We can talk about them. But if those assumptions are correct in terms of what does happen, more stimulus does happen either before or after the election, and that we begin to open up, then and then the uncertainty of the earnings are behind us, then the question becomes, does the market look through that now, or or do we have more headlines in the short term that are going to cause quick down movements? Now, the reason why I think there's going to be more quick down movements before we have that big rise, and I'm only about like 60% confident of this scenario, is that the reason why I think that could happen is because I've noticed the liquidity in the market has been very, very iffy. Like it doesn't take much selling volume to actually get the market to move down a lot more than it normally does. So we call that ease of movement in the technical world. So the ease of movement has declined. And so for that reason, psychologically, I think the market is short term, very vulnerable. But I think longer term, forget about valuation, because the valuations we can't really work with, but longer term, and when I say longer term, into the first quarter, tactically, it seems to me like we could have a much bigger number than people think. Now, I think that some people would say, well, wait a minute, we just had 60,000 new COVID cases, right? But the whole world is seeing that, but hospital beds are not going up a lot and deaths are not going up a lot. And there's a lot of news out there. There's news now that you can get tested. You're going to be able to get tested in a very short period of time, knowing the answer, like literally in less than a minute. Mm-hmm. So imagine yourself going on an airplane and you get tested and they say, oh, you don't have it. Okay, you're in. Oh, you don't have it. You're in. Oh, wait a minute. How much opening up that means for the airlines, how much that opening up that means for business, how much that could mean a lot. There's an Israeli company that's involved with this, Israeli and Indian company. So I think there's a lot of things that are kind of festering below. And I'm talking about regardless of who wins the election. I can care less about that right now because I think that's really going to be less important in the first quarter. Hi, if you like this information, be sure to subscribe to our YouTube channel, hit the like button, also share it with your friends. And to get the free report, the 10 avoidable surprises that derail executives planning for retirement, go to retireready.live and get your free copy. If we get stimulus before the election, it'll probably be a lot more than if we get it after. Mm-hmm. So I think that's the thing. And the reason why is just motivation for the election. That's my hypothesis. Anyway, I dumped a lot out there. What do you think? Shoot holes in it.
Well, I'm not going to shoot holes necessarily. I tend to agree. I think I talked a lot about uncertainty, right? I think that's the word I've been using as opposed to risk. And I think for everything that you're mentioning, this is all about lifting uncertainty. It almost doesn't matter what the outcome is, because right now there will be a stimulus. There's a question of timing. Does it come in the next 48 hours right now, or does it come after the election? And if so, and what is the size of it, right? Those are unknowns right now. And the market is also right now on edge figuring this out because so I agree. Once you know this, it doesn't matter if it's the greatest package ever put together. If it's the worst, we'll know about it. And that should help the market take a position.
Agree.
Like the market cannot price what it doesn't know, right?
Yeah. So there's some very interesting things. The question is, does it look through or not ahead of the election? Marcella is asking a question, wondering how the lawsuit against Google will change market, if at all. So, if you ask me, I think that it's more uncertainty for Google itself, and it's a big constituent of the market. And there's also a lot of pressure for big tech. And some of this is tied to the election, like what kind of lawsuits are actually going to be pursued are relative to the election. If Trump wins, then there's probably going to be very aggressive lawsuits against big tech, not just Google, but some of the other players. And since they represent a large percentage of the portfolio, from my perspective, or of the S&P 500, from my perspective, that could be a negative for indexers. But for investors like us, it doesn't mean much because we are individual stock pickers. But that's a really good question, Marcella. JP, what do you think about that? Do you have any?
We're keeping a close eye on that because, the magnitude of these settlements, these companies are so profitable right now. They are, coining money, and that's crazy. And they have huge amount of cash reserves. So it would take something completely, really significant for them to affect really these businesses in a significant way. I don't think we're going to talk about busting these companies. I think we're going to start regulating them, maybe more like the media is regulated and put some guardrails. Now, again, margins may come down a tiny bit because of that, and we'll have to price that. And again, it comes down to that idea. Once we know, then we'll be able to put that in our models and see what is it worth. How does it affect the value of Google, Apple, Netflix, Facebook?
Yeah, a lot of that has to do with what those companies decide to do, because right now they have an exception, a legal exception that allows them to be not considered, basically to allow them um, it's more of a free speech kind of a scenario. But the problem is that some people, and I tend to agree with this, believe that they're censoring too much, which would make them more of a publisher, which changes their exemption. So how they respond to that, if they, it has a lot to do with what will happen and who gets elected. Because I think if the Democrats are elected, this will just all be brushed under the rug, most likely.
Yeah.
If Trump comes in, I think he's got a bone to pick. So, right or wrong.
That's interesting, but I think there's pressure to put to regulate them in some way, shape, or form. So I think there is again overhead right there, and I think it's something that we'll have to keep an eye on.
The other thing I think is going to happen, JP, and you're already seeing it, is there's other media outlets that are coming out that to compete with Google, and I think Google has hit the peak of that no competition, and there's big money. And yes, they have. Okay, when you study Michael Porter and competitive advantage, you look at this, and it says yes, they have monopoly power and all that stuff. But they're at that tip. And I remember when Microsoft hit that tip. You know what happened to Microsoft? It went nowhere for over 10 years.
Oh, absolutely, couldn't agree more. It's a great case of that. And no, I mean that's what I was going to say. When you see companies cannot make 45% operating margins forever, right? It will attract attention, it will attract competition, it will attract. So I mean, the market forces are working the way they should, and it's perfectly healthy, right? I mean,
I guess that CFA was worth something, then, JP.
Yeah, I have I've fallen out of love with those big names. We own them, right? And we call that in the trail version. So we've owned them, we made good money on them. Now we pay them back to kind of what we call a trail, so we don't careful about taxes and the likes. But those are not my favorite stocks in our portfolio by any means. And we talked about some of the themes. I'd rather put that money to work in some maybe smaller names, newer name, more innovative companies that are poised to do well in the next stage of the economy. Like
I agree. Another theme that's really on my mind, JP, right now is, and I think, I don't know if I sent you that U.S. debt calculator, but if you look at the numbers, it's actually staggering. It's actually staggering what's going on. And you can't just brush that underneath the rug here. And so we saw a breakout in Bitcoin. So in full disclosure, I own Bitcoin. There is gold, and we own gold. So I think there is a currency situation that we cannot ignore. And this is not a political thing on either side. It's something that exists that is very hard to reverse. We have, from a bigger scale, over 50%. This is staggering. Over 50% of our gross domestic product is in government spending. Let that sink in. And the growth rate of that is very hard to stop. So if if you study biology and cancer and any kind of a compounding element on a host, at some point you have to make drastic cuts in order to reverse, or you have an implosion. And this happens throughout history, and it's very serious. And I think people are not really fully loving or understanding what this means. So for our investors, our goal is to protect, preserve, to help people attain wealth and maintain wealth. And that sometimes that means that we just need to store value because the dollar is not worth as much. And I think there's some of that we need to be considering even more now.
Yeah, I mean, some of these things, will play out over time, because some of these trends, you're right, are probably unstoppable, right? And you said maybe a way to stop the spending. You're talking about cutting entitlements and some of these programs that, are very, very.
They won't be cut.
Solve. So exactly. So, but what does that mean? What can we do about this, right? Well, when you talk about planning here, we're shifting a little bit the focus. But when you talk about planning for retirement in the long run, you're like, well, in that context, you're like, well, taxes going up regardless of who's in office, is pretty much unavoidable, right? You have less people paying for more stuff, and it's gonna probably have to happen. So that means that there are some things you can do to try to maximize that in that scenario, right? Again, we don't have a crystal ball more than anybody, but we have to make some kind of a backdrop behind which we try to plan for the best outcome for our clients, right? So
Yes, I mean we need to make an assumption that taxes are likely to go higher for sure. I was looking at the number of people that are retired relative to the total population. We have 330 million people in the U.S., and then also how many people are paying taxes. There are a ton of people that are not even paying taxes right now, and then you and then you look at the tax burden per person, the debt burden. If you look at there's two parts to our debt. There's the funded and the unfunded. The funded part is already staggering, but if you add the unfunded part, it's like $463,000 per person in unfunded debt. Okay, so when you start putting all that stuff together, it doesn't take a rocket scientist to figure out taxes have to go higher. But the part that bugs me is that even if you do put the taxes higher, the numbers don't reverse the situation if you just do simple compounding math.
mhm.
And that's even with low rates. That's even with zero rates.
Yep.
So when we finally get to that come to whatever moment, right? Then we need to understand, then I think that's a problem. But it could be far, far away. It could be 20, 30. We could all be dead actually before this, right? But we do need to be cognizant of it. And there is the technicals are telling us that we should be cognizant of it. Look at the gold chart, look at the dollar chart, look at the Bitcoin chart. Now, Bitcoin, here's my thought on Bitcoin. I keep getting people asking me about Bitcoin. I know you do all the time, and I want to hear your thoughts on it.
Yeah.
This is controversial, and we're not big on investing in Bitcoin. Okay. But I think that all the Federal Reserve, both our central bank, as well as a lot of them globally, they're basically saying, look, we're going to go digital. And it makes total sense. It makes total sense, right? So what is the likelihood that they're going to allow this other digital currency to be legal? Probably low, because then they don't have control over but then the other argument is, well, nobody can stop them to do it anyway. It can't be stopped. So, okay. So if you put all these different scenarios, it seems to me like you could have a big rally in Bitcoin, very big rally, but that it will become illegal most likely in the long run. But they may not be able to stop it. It'll be like a black market. So I have a kind of a love-hate relationship with digital currencies. I think there are some people that are trying to game it right now, where they're trying to basically, monetize that very quickly and then put it into other assets. So, but real assets are probably going to be more important if we continue this trend. You look at DBA, you look at the agricultural commodities; those are starting to rally. And so this is classic from a technician standpoint. When we look at secular trends, this is kind of what the charts are saying.
Yeah, no, I think you're seeing that. I mean, those are bigger themes around it, and the Bitcoin. I don't know if I'm not pessimistic, but illegal. I don't know if that's really what's going to happen. They're going to have to find a way to embrace it, but they're going to want to regulate it, right? And that's what all the central banks are looking at right now. I mean, we've had kind of a admission here that it is a currency, and JP Morgan and some of the big banks will officially support it as a mode of payment. So I think there are we're seeing some evidence that this is real. It's finally happening. Now,
but this is pushing the governments. This is pushing the governments to move faster to go digital with their currency.
And they don't understand.
They're trying to combat that.
Is behind. Yeah, the government is way behind on that, and they don't understand. They can't regulate what they don't understand, and that's the first thing, right? So we have. I think it's not going to fulfill, cryptocurrencies are not going to fulfill their original promise of decentralizing the currencies. It's going to be a different implementation, and we're seeing now some of those promises in some of the smaller crypto that actually have purposes in financial service and in providing transaction transparency and safety and security. So I think there's a lot of very valid now business utility to some of these coins, besides the Bitcoin itself as a currency. So I think, there's some things exciting happening there as an alternative asset classes. We currently do not, in interest of full disclosure, we don't play directly in the Bitcoin. We look at
No.
it from exactly from the things we can invest from a U.S. cash perspective, so cash version of those.
No, I mean, we can do, there is, you could invest in a trust, GBTC.
Exactly.
But there's very limited, and it's kind of early in its phase, and it's not, the regulations is the main reason why we're not going more with a particular allocation. So, so I think it's so for people that are out there that, I have no problem when talking to a client, telling them, hey, go buy some gold coins. It's okay. Go do it. 2%, 5%, do it. Not a problem. I have no problem telling them, if you want to buy some Bitcoin, open up a account and buy some Bitcoin. But just limit your risk. I mean, when I was looking at the risk, if you look at the volatility of Bitcoin, it's got an annualized standard deviation of over 100%.
Mm-hmm.
So based on how I invest in the proprietary money, it's, you're talking about no more than 4% of your portfolio in that. So you would not go big. I've actually heard of a very smart gentleman, I won't mention his name, who said he has 50% of his risk budget in Bitcoin. I think I wouldn't do that. So, but
yeah,
I'm
probably
too chicken.
Yeah, we just added to gold, but I think that's the theme, right? I think we may have to look at these alternatives. Again, when you look at those giant trend in the market. So I don't know if we're getting to the end of our time.
We've got 2 minutes, and then we need to be done. So what else do you have? I mean, we were talked about earnings, we talked about uncertainty, we talked about how there could be some positive things behind the scene. We've been talking about how valuations are not cheap. And so the number one thing is protecting capital right now. That's our biggest thing right now. And so
yeah,
we covered everything.
Yeah, I think that's pretty much it. I mean, we're looking at emerging themes, what's going on right now, whether it's confirming or kind of maybe denying our primary thesis, right? And right now we're being a little cautious because of maybe some short-term volatility and risk, but really not in a running for the hills, putting the money under the mattress kind of way. It's really about being ready to jump on the next. Once we get confirmation and the market has given us all the signals, we have dry powder to go in, right? So again, I don't want to send a signal that we're freaking out and we're negative.
No, never.
I see every one of these things clearing up, clearing the path for the next leg up. So I remain
absolutely. JP, good analysis, man. You brought up some good stuff on the earnings. Let's see. We'll have to revisit this once the earnings season passes, the election season passes, and all of that. I have some thoughts about maybe talking about fixed income in the future as well. So yes. Good stuff. Thank you so much, JP. We're out of time now. So I hope you have a good one, everybody. And JP, until next time.
Have a good day.
The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals. If you like this information, be sure to subscribe and follow us on Twitter and Facebook.